Have you ever been in a shop and asked for a tax invoice, and then the owner of the shop is surprised and then walks to their computer, open a Word document and start typing tax invoice? They might ask you for your company name, and they might put their company name also, and then put the amount that you are paying without even showing the VAT that you are paying. Print that tax invoice and give it to you. Well, is that a legally recognized tax invoice? Today, I'm looking at what is the legally recognized tax invoice. And when I say legally recognized, I'm referring to ZRA, because they are the tax authorities. They are the ones that require tax invoices. And so they determine what format a tax invoice should take and the features of a tax invoice. So today we are going to look at what are the features of a tax invoice so that you are issued with a genuine legally recognized tax invoice. Because if you don't and you are registered for VAT, you may not be able to claim your input tax on that invoice, which is not legally recognized by ZRA. So this is what I'm looking at today. I won't waste your time, I'll go straight into it. What is a tax invoice? VAT is invoice driven, meaning that any registered VAT supplier must issue a tax invoice for their sales. And this goes for those businesses who have been given the cash basis concession. I'll cover this later in a separate video. So even if you are on the cash basis of accounting, you're still required to issue a tax invoice. A tax invoice is normally issued at the point of the transaction. So if you receive a customer in your shop, you are required to give them a tax invoice. You should give them a tax invoice. And when you give them a duplicate or a copy of that tax invoice, it should be clear that it's a copy or duplicate tax invoice. Okay? So the word copy or duplicate must appear on the copy of that tax invoice if you are reprinting that tax invoice for your client. A few years ago, ZRA introduced electronic devices, and it is a requirement that a taxpayer or a tax supplier must issue tax invoices from the electronic device, which is an electronic device that allows you to print tax invoices, which are pre-numbered or sequentially. So as a taxable supplier, you are required to issue your tax invoices from the electronic physical devices or EFDs. Now, the ZRA gives concessions to those that are unable to acquire these electronic physical devices or don't have access to these EFDs. They are allowed to use manual books or accounting systems that are pre-approved by ZRA for issuing tax invoices. So the keyword there is your accounting software or system must be approved by ZRA for it to issue the tax invoice. Now, let's look at the features of the tax invoice. What is ZRA looking for and why? Now, let's take a look at an example of a tax invoice. First of all, the words tax invoice must be prominent on the tax invoice. The name, address, and taxpayer identification number of the supply should also be clear on the face of the invoice. The tipping of the customer in the case of a business to business or a business to government transaction must be clear as well on the tax invoice. I think this is something that many businesses actually miss out on. They do not indicate the tipping of their customer. If you are in the B2B business, meaning you sell to other businesses, you are required to indicate the tipping of the business you are selling to or your customer. The customer's name, the serial number of the invoice, and the date of issue. The quantity or volume of goods and services supplied. The description of the goods or services supplied. The selling price excluding VAT and any discount. The selling price that excludes VAT is referred to as a tax exclusive amount. It does not include VAT. So this needs to be clear on the tax invoice. Then you need to show the total amount of VAT charged. Then you need to show the selling price that includes VAT. The selling price that includes VAT is referred to as VAT inclusive. So when your selling price includes VAT, it is referred to as VAT inclusive. So that must be clear on the tax invoice. The total amount of the transaction must be shown on the invoice. This includes the selling price plus the VAT plus any discounts offered should give you the total value of that invoice. Businesses are required to show separately on the tax invoice any supplies that are zero rated or exempt. So you need to watch out for this. When you go in a shop, maybe a retail outlet, you need to look out for any zero rated or exempt supplies that are showing on the tax invoice. They are clearly outlined. If your invoice is in a foreign currency, you also need to indicate the exchange rate on the invoice. This is something that businesses also miss out. If your invoice is in a foreign currency, also indicate the exchange rate that you are using for that transaction on the invoice. So this is how your invoice should look like if it is coming from an accounting software. There are a few other features that you need to take a look at, or that you should consider if your invoice is coming from the electronic physical device, such as the serial physical tax invoice number, physical invoice code, terminal ID of the point of sales system, date and time of printout. So these are some of the additional features if your invoice is coming from the electronic physical device that you need to ensure that are in place. All invoices must be serially numbered. There must be a sequence to the invoicing. So if you start at 1, your invoices should flow. They should go as invoice number 1, invoice number 2, invoice number 3, and so on. There's no way you can have an invoice that is numbered 10 today, and then tomorrow it's numbered 3, the following day it's numbered 100, and another day it's numbered 1000. That is not serially numbered. Serially numbered means that the numbers must flow. So if you start at 1, you go to 2, you go to 3. So you need to ensure that your manually or computer generated invoices, even those from the electronic or physical device, must be serially numbered. The date on the invoice is extremely important because it determines in which period an invoice must be accounted for. Okay, now remember, VAT should be treated on an invoice basis, meaning that when you issue an invoice, the period in which you issue that invoice is the period that VAT must be accounted for, unless you've applied for a cash basis of accounting, and that can only be done through ZRA, through the Commissioner General. If you are not VAT registered, can you issue a tax invoice? The answer is no. You are not permitted to issue a tax invoice if your business is not VAT registered. In fact, you are not permitted to charge VAT on your sales if your business is not VAT registered. However, all businesses can issue invoices. This is because an invoice is a document that you send to your customers demanding or requesting for payment on the sales that you've made. In most circumstances, an invoice is issued on credit sales. And that is why accountants refer to an invoice as a demand for payment. You issue an invoice requesting for payment. There's normally a little bit of confusion between an invoice and a receipt. A receipt indicates that payment has been received, whereas an invoice is sent out even where payment hasn't yet been received. It's a demand for payment. So, as a business person or as a person who knows how to manage their businesses really well because they've been following the Dalama Insights business program, you know that you're supposed to issue an invoice to demand for payment on your credit sales from your customers. It's part of good financial management. However, if you are not registered for VAT, either voluntarily or as a requirement because you've exceeded the minimum threshold of your turnover of 800,000 that is required for registration for VAT, you should note issue a tax invoice. So your invoice should not have the words tax invoice. Okay? And you should not charge VAT. Let's assume that you had charged VAT in error, even when you're not registered for VAT. What should you do? You are required to issue a credit note and also refund your customer the amount for the VAT. So issue a credit note for the amount that you charged for VAT and also refund your customer. And immediately report yourself to ZRA. Go and confess your sins to ZRA so that they might forgive you and you might receive a less penalty or a lesser penalty, or you may be forgiven. Remember, we have a tax amnesty running. This is time for you to confess all your sins, including that VAT that you might have charged, which you are not allowed to charge, so that you are not penalized for that. Now, what is a credit note and how should it look like? A credit note is issued when a customer returns goods or refuses your services and are unable to pay for your product or service because of a particular reason. It might have been, you supplied a wrong item, the color wasn't something that was agreed with the customer didn't want that particular product or service, and so they're not going to pay for it, and you need to issue a credit note. When you issue a credit note, the word credit note must be prominent on the face of the credit note. The registered supplier's name and address must be shown clearly, the taxpayer identification number, the date of issue of the credit note serial number, the customer's name and address, and the description of the goods or services supplied. The number of the invoice that is being adjusted. So as a reference, include the invoice number that you are making this credit note on. Statement of the reason for the credit and the amount of the credit. So in the example that I gave, the reason could be charged VAT wrongly. That is why you are issuing this credit note. Okay? So these are the key features of a legally recognized tax invoice as well as a credit note. In summary, you need to ensure that as a taxable supplier, you issue invoices from the electronic or physical device. And if you don't have one and you've received a concession from ZRA, you are permitted to issue a tax invoice from an approved accounting package. Also remember to keep these records for a minimum period of 6 years. So keep these records properly for at least 6 years. So next time you walk into a shop, ensure that that tax invoice has all these features, because if you are registered for VAT, you may not be able to claim that VAT if you don't get a legally recognized tax invoice. Okay? Well, this is all I had to share in today's video. In my next video, I continue looking at VAT. I'm going to take a look at an actual example and how to submit a VAT return. And I might also look at other important aspects of value-added tax. Thank you so much for watching. If you enjoyed today's video, don't forget to give it a like, and also don't forget to subscribe to my channel by clicking the subscribe button. It's up here. Click subscribe. Thank you so much for your time and see you next time.